What a special treat. Welcome back to the Daniela Camboni Show here at ITM Trading. Joined in studio today by Clem Chambers. You all know him from many podcasts we've done, but now he stopped by our New York studio. Clem, you're from the CEO of Online Blockchain and
A new FN.
newfn.com. I got it. Welcome by. Thank you for stopping in. You were telling me the reason you're in New York City, and I want to get to that because this whole time I've known you, I did not know you are a famous artist.
Infamous artist. I wouldn't say quite famous, but I have over the years sold a lot. And when I was a kid, I started out in computer games back in the very early 80s. So you could say I was even one of the founding OGs of digital art.
Wow. So you have an exhibit going on right now in the city.
Yes, it's art and paper down on the shore, down the south end of the island.
Right.
I drove by it last night on the way back to my hotel, and there was fire engines all around it, and I thought, oh no, work on papers up in smoke. But no.
I'm interested to get your thoughts on New York City these days. How do you find the city?
I've always gone in and out of phase with New York. When I first came here in the early 80s, it was absolutely a wild jungle of trash. And it seemed to be there's only three people that could live here: people high on coke, people high on weed, or people that were just going crazy from the stress. And then it got so much better.
Right.
And then about 2003 and 4, I actually lived right by the Carnegie Hall. And I tried to live here on numerous times, but it's the noise that gets me. Ka-chung, 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 all night from your bedroom, even though you're on the 23rd floor.
Right.
And the hotel I visited with a friend who's staying here, it's got an underground train going by, going grrr, like every 10 minutes, all day, all night. And that's too much for me. I need to live with peace and quiet.
Well, let's talk about peace and quiet. We don't have much right now in the global economy. We're speaking as gold. I mean, by the time this airs, hopefully that maybe there's a new all-time high. But you say gold is for war, and that's why it's going up. So you're more bullish than ever on gold?
I hate that word in this instance.
Bullish.
I'm more bearish on humanity.
Well, that's a better way to put it.
Yeah, bearish on humanity, bullish on gold, and it's sort of like it's not going to get any better, is it? I mean, it just gets worse, and that's been my point. It's not that we are going to go, into the apocalypse. It's just that we're walking ever close to the edge of the cliff
Of that apocalypse.
of World War III, and I meet people in various governments now and again, and some of them actually think we're already in it. They think it has already started, and that's really, really just awful. But it's up to us to look after ourselves by looking after our finances. And if you think at gold, its purpose, its main use case is as currency in war, you realize that governments are going to be buying it and keep buying it and keep buying it. And they are. There was an article about 4 months ago. See, this is an idea. It's a concept. And you check it against what happens. So I go, God, gold is for war. Of course it is. That's why governments stack it up. And then you hear Poland going, look at this gold bar. We bought more gold bars.
Yeah.
And you go, oh no, that fits my premise. I don't want there to be World War III. But the premise is, if we're heading towards a conflict, even if tension's ever increasing, then the price of gold will go up because every government has to buy it and keep buying it and keep buying it. As tension goes that way, their gold reserves have to go that way.
Well, we're already seeing that. I mean, to your point, central banks for the first time in 30 years own more gold than U.S. Treasuries.
Yeah, well, you can't give your U.S. Treasury to somebody for tanks or for minerals in a situation of war. So the ultimate currency in war is gold. They only take gold. There's a funny story I'll tell you about. Back in the day, Second World War, German wants to buy tungsten because tungsten armor piercing shells, and Portugal makes them, and Portugal was a fascist government at the time. So the Germans showed up with crate loads of British £5 notes, paper, £5 notes, and they said, here's payment for your tungsten. And the Portuguese, well, thank you very much, that's good. English money is always good. Oh, some more English money, that's good. Where are you getting this from? The Germans were forging it. They were forging British paper money and buying tungsten with it. Well, you can imagine once the Portuguese worked that one out, they only wanted gold after that.
Do you really think the reason the central banks, or do you think the main driver is the fear of war?
Yes.
Is that why they're hoarding gold?
Yes, absolutely. Without a doubt.
more than de-dollarization, or that all fiat currencies are going down the tank?
Well, if all fiat currencies go down the tank, everybody's goes down the same, and they just take your $1,000 bill and they knock 2 noughts off it and call it a new dollar. The history is full of debasement, and it's never changed. That's cool and groovy as far as government's concerned. They do it all the time. They do it in Turkey right now and have done for the last 30 years.
You know what I find interesting, Clem, because I've been doing this for a very long time. I don't think I remember a moment where I've had so many experts so concerned. I mean, I just spoke with Peter Grandich ahead of you, and he, said this is probably the 3rd or 4th time in his career where he just feels like we're at this moment where the wheels are really coming off. I mean, economically speaking now, looking at the U.S. economy, talk to me a little bit about where we're at.
I don't worry about what it feels like now. I think about what's going to happen next. So we are probably in for the biggest economic boom of all time, and that's going to come from AI. Okay, so you've got this kind of fork in the road. You've got the road of the Putins of this world into disaster, and you've got the road of technology into utopia, and it depends which road we're going to go down. And I'm positive. I think we're going to have this massive economic boom, but it's going to have all sorts of spin-offs and all sorts of investment opportunities to make a lot of money and opportunities to lose a load. Okay, so I see that. I think it's going to go right. If you wanted to be an optimist, and I know that doesn't make views, you could say that this new idea of almost complete transparency from governments, like Trump just says it as it is, that's what they're thinking in the White House. And they're thinking, we're going to have a punch up here.
Yeah.
That might be good, rather than them being in the White House thinking they're going to have a punch up and not telling anybody. So this transparency, if you wanted to see it like that, that might be good. It might be catastrophic. So you have this opening up of volatility, an increase in volatility. And so everything gets more lumpy, there's more potholes, there's more booms, there's more bubbles, there's more busts coming up, rather than before where they might have been more spread out. So you saw, we already had a crash this year, right? Trump came out with a tariff, market crashed. I don't know who in the American government came out and bailed it out, but they did. So you've had this crash, this amazing recovery. And that's the sort of market action you're going to get going forward. Lots of very big moves, which is, for some people, is a nightmare, and for other people is a dream, right?
You've said the dollar's reserve status may be America's biggest liability. Why?
Well, what's the purpose of it? The purpose of it is to fund the American government's runaway spending. Well, that's not good, is it? I mean, it's funny when it comes to crypto. Everyone says, oh, government is embracing crypto. That's good. And you think, is it? When has their dead hand ever been good for something? So if you ask yourself, back in the day when the global reserve currency was before the modern era, that was gold. The reserve currency was expressed in gold. And now it's expressed in confetti. So when you look back at the British and they were the global reserve currency, how great was that? That's because they had all the gold. Yeah, and it was the gold that was the reserve currency. Before there was the French. It's because they had all the gold before they had a revolution and killed everybody. So being a reserve currency used to be about being the country with all the gold, which America was in the 40s and 50s. So to look at the actual confetti machine and say it's good to have the ability to print money and give it to the world and go on a bender, that's not good. And that's exactly what America's done. It's gone on a bender, and it's heading towards being broke, or at least economically damaged by that. So the ability to stuff your confetti onto other people flows back on you. If it's gold, it's different. But if it's confetti, then they can take your confetti and give you their plastic junk and then come back and buy your real estate and your farmland. That's not a good thing.
So could you see a scenario evolving where, I'm not saying gold becomes the reserve currency, but a reserve asset?
Well, it is a reserve asset. Yeah, that's exactly what it is. Yeah, but I mean, oil is a reserve asset. America has huge, tanks of oil. All commodities can be reserves because they represent a fundamental value, which you can then parlay into confetti, or you can swap for confetti, or you can benchmark in your currency. I shouldn't keep calling it confetti. I like American dollars. American dollar is very strong. But nonetheless, reserves are a good thing. And I think we don't have the happiness of this broad, how could one put it, supply chain. A lot of physical assets, a lot of commodities will become reserves because countries will have to build up reserves because the supply chain is going to be fractured.
I need to ask you about the Fed, because when you speak about gold, gold is for war. But what about the coming rate cuts that we know we're going to get? Are you not factoring that in?
Well, the dollar is strong. The dollar needs to be weaker. The interest rates are high because they've been trying to squeeze out the inflation that was injected during COVID, and they kind of managed that. The economy is now, under a bit of pressure because all the liquidity, vast trillions of dollars of liquidity, have been sucked out of the dollar system by the Fed because they've been trying to get their balance sheet back down to something that looks like the good old days, and they've managed it pretty much. And I'm sure they would like to carry on doing that. But first of all, the pressure from the White House meant that they said, okay, we'll stop tightening. We won't do any more tightening. So the tightening stopped. Well, what's the next move? The next move is into the opposite of tightening. It's back into QE. And for that, you have to interest rates down. You flush money into the system by buying your own bonds back for cash. So basically monetization, at least if it's not technically monetization, it really is. Because if you look at the Trump strategy, it's about growth. You can't shrink your way out of this problem. You've got to grow your way out of this problem. Well, you can't grow your way out of the problem unless you've got a decent amount of inflation and you're printing money.
Are you talking Bernanke size QE or way worse?
I mean, one can choose the pejorative words, way worse, or you could say way more. Yeah. If, for example, AI is the thing, if America building back its industrial base and manufacturing base is really going to work, then that would make sense. Because there was a time when there was a shortage of money out there, in my opinion. And that's why one of the reasons crypto exploded, because there wasn't enough money. And so when somebody said, oh, I got this way of making private sector money, the world went, yes, and it exploded. Because the central banks were so scared of inflation, had such a mindset about inflation, we don't want any of it anywhere near, that they hadn't supplied enough money for economic growth. Now, if you have the right amount, you don't get much inflation. If you have too much, you get inflation. So there's a balance between not enough and the economy just sputters, and enough and everything's hunky-dory. A little bit too much, who cares? Too much, oh, this inflation, my McDonald's are going up rather fast. Way too much, boom, 20% inflation, runaway inflation. So the Fed has been very, very good at keeping the wheels on this runaway train. Okay, and you can't blame them for the state of the American budget deficit, etc. You can't blame them for that. But you can say, well, what a trick to keep this train on the tracks. But now you've got the political level exerting this pressure on them to do what they're told. Because remember, the whole point of them being independent was you can't trust politicians not to blow up your economy to get elected in 2 years' time or 1 year's time. It's the South American problem, right? The Argentinian politicians say, you will print that money and you will give it to my mates because I want to get elected in 2 years' time. Oh, look at our inflation rate, 25% now. Oh, look at our bonds, nobody wants them. So you have a independent central bank. So when the latest, Presidente shows up and says, print money and give it to my mates or to my supporters, the central bank goes, no. I'm telling you, I'm going to sack you. Well, you can't sack me. I'm independent. They passed a law saying you can't do that. The independence of central banks, the reason that it's like that is to stop politicians making them do stuff that is bad in the long run, but good in the short run for them. And now we've got a situation in the US where the political level is trying to strong arm the Fed. And that is a very, 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 very dangerous place.
Final point, Clem, you obviously write a lot about Bitcoin. What happens to Bitcoin in the scenario?
Well, with grenades getting thrown into bunkers, that will support Bitcoin. If that stops, Bitcoin will just go poof, will fall like a rock. So this gold is for war, i.e. you prepare to be able to have a war by having gold and by buying gold and laying gold in and building up gold reserves. Bitcoin is for flight. So if suddenly you have to leave the country really quickly, Daniela, but you've really got to go in the next 2 weeks, where would you put all your money? You put it in Bitcoin, wouldn't you? And in situations where whole countries, all the rich people might want to head for the airport, that's when Bitcoin runs. So when you see the bombs about to fall in Iran, who produce 25% of the Bitcoin, by the way, they mine 25% of the new Bitcoin in Iran. That makes me not a fan of it right there. But when they think, oh, bad things are about to happen, Bitcoin runs. Yeah, when perhaps one of the sides in the war in Ukraine thinks they're going to have a problem, Bitcoin runs. When America pulled out of Afghanistan, Bitcoin ran. And do you know what? One of the ministers left $5 million of cash on the tarmac because he couldn't get it into the helicopter. And that's what Bitcoin use case is.
Yeah, but you can make the same argument and
Go on,
deport a bit. I don't want to get into this debate, but when you say you'd put it all into Bitcoin,
it's flight capital.
Right, but you could make the same argument. You use that for gold. We've seen people fleeing countries because of gold. With gold,
$100 million is a ton. You can't get a ton of gold on.
know how? But I'm saying if you want to take a certain amount of how big is an ounce of gold?
About that big,
right?
Yeah, a kilo is 100 grand.
Right, that's harder to. But there's ways around that.
I've got 500 million.
But you don't need to physically take that gold bar.
Yeah, where is it then? With the KYC and AML. Yeah, if you've already exfolated, if you've already stolen the money and got it into another country, not so much of a problem. But what about the 150 million you've got back at home?
I'm just saying not everyone would necessarily choose Bitcoin as their path.
Well, if you had 500 million that you needed to go with you in the next 14 days, that's how you do it. And that's why when something bad is about to happen in the next couple of weeks, up goes Bitcoin. And then when it happens, down it comes again. Or up it goes, it doesn't happen, and down it comes. If you see Bitcoin spike up, something wicked this way comes, and then gold follows. Time and time again, you can see it in the chart. You can just get your news out and write it have the gold and Bitcoin chart running together and go, this happened here. Oh, let's go back 2 weeks when everybody in the know knows.
They can both run up. We've seen it both run up at the same time.
Sure, because they're connected. One is for war, one is for flight. Well, if you want to run away from war, you go Bitcoin, and then the gold goes up because the warish thing happens. It's a great way, because actually another way to use that is to go, oh, wow, Bitcoin and gold are really, really running. I think I'm going to buy, Boeing. I think I'm going to buy Grumman. I think I'm going to buy, somebody who makes missiles. So, one is an indicator of the other. Bitcoin is the early warning. That's the canary in the coal mine that might be teetering over. Then gold runs. So Bitcoin is for flight. Flight comes first. And war comes second.
Well, now that we're covering this, just a few moments on silver. Then, is silver just following in gold's lead? Yeah. Is that the play, or is there more?
So once upon a time, gold and silver were retail assets. Okay, so gold goes, silver goes. Maybe silver goes and gold follows. Gold goes and silver goes whoosh, because it's even more retail than a few gold eagles. However, gold is not retail anymore. It's government. So government buys gold and goes, what's going up? What's going on? Oh, it's going up. Well, that's really good. I said it would one day. Oh, yes, it's all about the de-dollarization and all that old toffee. It's not. The governments are buying it. And they're saying, yeah, we'll have another 10 tons of that, please. And yeah, next week another 10 tons, please. They're hitting the offer. And it's governments. So all the retail people are looking at it and going, well, silver should go, shouldn't it? No, it's not going. It's not going. Oh, why is that then? Well, because it's not retail buying it. And then retail goes, and everyone else goes, well, if gold's going that way, silver's going that way, and then it goes, and then everybody piles on, up it goes. And so we're in that aftershock. Gold has gone up, and it's now pulling silver along with it. And there's also platinum and palladium, of course. I mean, I just bought a truck of silver today.
A truck?
A truckload of it, yeah. I mean, not a literal truck, but you probably need one. And because it's going a long way as well. And it took me a long time to look to silver, because I've been looking at platinum and palladium, which has done really, really well. But the chart, the technicals on silver are quite interesting. Your viewers will love the following. Okay, so there are 3,200 tons roughly of gold and dug out of the ground every year. Okay, so there is only 25,000 tons of silver. That's only 8 times as much. Well, if you divide gold by 8, you don't get $40 an ounce, do you? Yeah. So that's only 25,000 tons, and this stuff's only $40. And platinum and palladium, which is the one that I keep checking this number up because it's ridiculous. 200 tons a year of platinum is mine. 200 tons. You probably fit it on this desk.
That's it. That seems astronomically low.
It
I
is.
have to fact check that, Clem.
Yeah, you should. And when you check it, you'll want to check it again, and you'll want to check it again. 200 tons of platinum, roughly. I think it's 190, but 200 will do. And 200 tons of palladium. Yeah, and they're $1,000 an ounce.
Or maybe that's what's been, because who are the main producers? South Africa and Russia. So that's but how do we know the numbers are real?
Do you know that America, who doesn't like Russia very much, and there's got all sorts of sanctions on it, don't put sanctions on platinum palladium from Russia?
No, I knew that. But I'm just saying we don't know what's really being mined, is what I'm saying. Just like gold out of China.
Well, I mean, I think you do. With it, I mean, it's not. There's not going to be another 50,000 tons being mined somewhere else. It's only Russia, South Africa, and America that mine it. And all these numbers are really known because, I mean, you dig out the hill, it costs you money. You're not going to suddenly pretend you didn't dig it out the hill. Miners don't do that.
Clem Chambers, what are you going to do in New York tonight? Broadway show?
I think after all this stuff that's been going on, I think I'm going to drink way too many martinis.
Well, there's a lot of dive bars around here. Stay safe in this city. And thank you so much for stopping by. It's been great to finally meet you in person.
Yeah, lovely to come on. Yeah. Thank you for having me.
And thank you for watching. More great content headed your way here on the Daniela Cambone Show. As always, I invite you to reach out to my wonderful colleagues at ITM Trading. There's a link below in the description. You can write to them and chat with them, and they'll help you build a whole strategy around owning physical gold and silver. Tell them I sent you. They'll take extra good care of you. We'll see you soon.